When we last left off with the previous video, we spoke about this worksheet that's sitting here in general, and we described all the columns and how we're going to use them. And again, this is the worksheet to help us close the books at the end of any accounting period. Over a little bit for you. Now we're going to talk about preparing the unadjusted trial balance. This is pretty simple. And so the first thing I had to do, and I've already done it in the interest of saving time and effort, but I'll go through the answers that so that y'all see them. I went through, and hopefully you've done this already. If you haven't, go ahead and do so. But I logged the balance in each of the ledger's accounts as of the end of the month. So here we have the cash with a balance of $132,600. Okay, so let's add that in. Cash, of course, has a debit balance, so it's in this column. Accounts receivable. I added this one up, and at the end of the month, we are owed $1,500 by the customer that we sold to. You remember that was that two-wheel tour company. And so at the end of the month, that balance, and again, that check mark means this is a balance, is $1,500. So we add that. Now the next line is, oh, and by the way, if you didn't have the accounts already written in, you'd be adding those as well. And since we're in the days of Excel, you can always add lines because other accounts will likely be necessitated by certain adjusting journal entries as we complete this worksheet. So if you're adding in these accounts, you would just type in the account name over here. And that brings us to bicycle inventory. And remember, we have at the end of the month 90 bikes, and we checked that in the warehouse and in the showroom, and indeed they're all there. So we didn't have any inventory shrinkage. And the cost of those 90 bikes is $100 per bike, or $9,000. So we put that in. And so on. Prepaid rent. That account is just $12,000. There was one transaction in prepaid rent. It's sitting at $12,000. So that's also a debit balance in the asset account. And then equipment. Similarly, the equipment account is just that cost of those showroom fixtures and equipment of $12,000. Accumulated depreciation currently has a balance of $0. Let's put that in there. I'm sorry, $131.20. Okay, so we've now put that balance in there. And it has a credit balance, so let's put it over here. And that's all the assets that we currently have on the books. And again, needless to say, a couple of things. One, there'd be a lot more transactions, a lot more accounts in your, when you start to do this for real. But this is the process. So we're keeping it simple here, but it's no different. There's just a lot more of them. And so if you're nailing this, you're good to go. It'd just be more lines. Accounts pay, and by the way, second note to note is the trial balance will be generated automatically from any accounting system by virtue of having the balances done. So you would just say prepare trial balance. But now you'll know when you click prepare trial balance how the machine is doing that. Accounts payable. This is the liability accounts, and we have accounts payable of $2,000, unearned rent revenue of $3,600. The bank loan has a balance, hence the check mark, of $60,000 right now. Interest payable has a balance of 0 right now. Okay, so let's put those into our schedule. These are, of course, again, credit balances. So we have accounts payable, $2,000. We have unearned rent revenue of $3,600. We have interest payable of 0. We have a bank loan payable of $60,000, and income taxes payable of 0. All right. Our stockholders' equity accounts. We have nothing. We have $100,000 of that contributed capital in our contributed capital common stock account. Now, I'll write it in. We're going to have some retained earnings here. Retained earnings, again, are the sum of past income generated by the company offset by any dividends paid as a return of equity to the shareholders. And since this is the first month of the company, this currently has a 0 balance at $131.20. It won't after we do the closing entries, when we close the accounts to retained earnings and start them over for the next period. Okay, but it currently has 0. This is a permanent account, remember. So it will only have 0 now. Now the company will just keep making money, and this will get hopefully bigger and bigger and bigger as we earn that income. All right. So common stock, credit balance of $100,000, and retained earnings 0. Dividends so far are also 0. That's a debit balance, excuse me. Sales revenue. All right. Sales revenue has a $2,500 credit balance. Rent revenue. That one wouldn't even be on there because we haven't recorded any yet, but we know it's coming because we are renting that space out to our tenant. But excuse me 1 second, and I'll show you what I'm writing here. I'm preparing the account. Okay, this is what I've just done, is I've go ahead and started the account. It has a 0 balance right now because we just started renting this month. Okay, the expenses, we have several expenses listed here, but we've only debited one so far, and that was that cost of goods sold for $1,000. Those 100 bikes. I'm sorry, those 10 bikes that we sold at $100. And obviously, in the real world, we likely would have paid our employees something, and we'll see about these other things. Okay. So at this point, what we need to do now, we've put in all the accounts, so we have nothing else in our general ledger. And the purpose of the trial balance is twofold. First, we are going to total it up and make sure our debits equal our credits. I'm pretty confident that they're going to, because remember, we kept checking that box when we posted our journal entries, and I know they balanced. So I'm pretty confident we're okay here, but we need to check. And if you add that column up, the total debits are 168,100. Pause the video and make sure that you agree that that is the sum of these values. The total credits, we can do these pretty quick just to show you in real time. 160, 162, 165.6, 167.6, 168, 100. So indeed, debits equal credits, and we are good to move on. And that's the end. That's how you do a trial balance. That happens to be the unadjusted trial balance. Now, not only have we proven that indeed our debits equal our credits for all the transactions during the period. This is less of a big deal now, by the way, because one, of course, the technology posts, and two, the technology we use in the real world won't let us finish a journal entry if it doesn't balance. But we still have to know what the machine is doing for us. All right. Now thank you for your attention. That's the end of the trial balance production. In the next video, we're going to concentrate on the adjusting journal entries. This is a big video, so pay close attention to it. It's a huge role that the chief accounting officer of a company leads and the accountants complete. Very important. Very, very important. And so in the next video, what we're going to do is we're going to use the unadjusted trial balance for its second purpose. Again, its first purpose was to make sure debits equal credits. Its second purpose is we're going to look at every one of these balances and say, is there a reason why this isn't the correct balance? Might there be a reason that interest expense of 0 is not correct? Might there be a reason that depreciation expense of 0 is not correct? That rent expense of 0 is not correct? That income tax expense of 0 is not correct? Might there be a reason that interest payable is not correct? And so on. So we will look at each of the lines and do the adjusting entries in our next video. Okay, thank you for your attention, and I will see you in the adjusting journal entries video.